Welcome back, guys. So if you're new to the channel, we cover stock charts. It's all about technical analysis. And in this kind of market that we're in right now, technical analysis is working like a charm. So if you're if you're new and you're finding value, hit that thumbs up, give me a subscribe if you want to stay tuned and follow along. And let's get right into it. So triple Qs. And if you want to see the bigger macro picture that I've outlined for the stock market, go back and watch some of my older videos. You'll see the macro picture and where I think markets are heading in the medium to maybe longer term. But it's down, okay? I think markets are going down. So if you want to see those levels and charts, go back and watch some other videos. I call those levels out in almost all my videos. Right now, I just want to narrow in on the near-term stuff. So I took a short yesterday at the close. So on the hourly chart, the hourly charts are working really well to give you those levels. But here's the levels I've had defined on triple Qs. 192.78, and then we've got support right here at 185. And yesterday, in the last couple minutes, we just spiked right into that resistance level of 192.70, and I grabbed a short right there at the end of the day. If I go to the 1 minute chart, you can see here it is. Last couple minutes, we just popped right into it, just hit that level to the T, and then I was able to get short. I took a full short position overnight and held it overnight and was expecting a gap down, and that's what we got. We got the gap down. We fell right down to support, and basically that's where I didn't cover at support. I covered on the open. I decided not to try to get the last little bit, but grab that big gap down. And then what I'm expecting now is I expect we probably undercut these levels at some time today. I think we're going to probably fail here. So we've been bouncing off this support for a little bit, but I think we're going to fail it. That's just what my gut tells me. But and so I covered my short, and then I recently just reestablished a half position short, not a full size. So for me, that's 200 shares on triple Qs. I like to trade 200 to 400 shares. But it doesn't really matter about the size. It just matters about, the position that you take and where these things are moving. But I got a half position. I grabbed it on this little pop right here, and I'm expecting this to roll over and at least come back down to this support again. It's been doing it several times today. It's really, been a pretty profitable day to, it's just the markets are reacting very technically. And so it's a trader's market right now. They're bouncing off these levels and everything's working out. So I think if we go back to the hourly chart, you can see that, I think we're going to, we ramped up, and I think we're going to break this 185, start to head south. But we're not exactly sure, so we have to wait for that to happen. But I think it's going to happen. The reason why I think that is this was your ramp right here, and into the close, ramped right up into resistance. And anybody who closed, anybody who doesn't know technical levels yesterday, markets look good, closed really strong, looked great, nice, strong 3 days in a row, up 20% from the lows. Everybody's feeling good. And that's the slope of hope, is the fact that, you have a nice big fall. Then you go up, give people hope. They don't get out of their positions because they're getting their money back. And then you make the next leg. So I think that was it for the rally. That close looked pretty good with just ramping straight up, and I think we fail here. So that's kind of how I'm trading it, looking for that. But I will take profit along the way. I took a low profit today and then recycled back into those shorts, looking for this thing to roll over. All right, I don't show my trades and my positions too often. I just don't think it's really necessary. I don't think it's important and valuable for people to know what I'm doing or how much money I'm making. But I just want to show that, I do actually trade. I am actually, I do take positions in what I'm talking about on my charts. And, here's this short, this triple Q short. I had 400 shares when I opened the day, and I covered all those at the open, and then I recycled back in to the short, on this pop right here. This is a 1 minute chart of the triple Qs. I think this rolls over, and I recycle back in with 200 shares. So I got 200 shares right now, and there's my profit so far today. And then I got this trade going on, this UUP. I'm short the dollar. I called that out in my last video. So far, I don't have a huge position on it, but it's I don't need a big position on it. And so that's that. I just wanted to show everybody that, I do actually trade what I'm talking about. I don't just, anyways, moving on. Okay, so back to the chart. Again, we're just, as of right now, here's the levels, 185. It's about 185. And then 192.80. That's the top end. And we're just, as of right now, bouncing within this range. So look for, a break up or down. We could easily go up. I mean, on the upside, the bullish scenario, we could easily trade all the way up to this 202, 203 range. That would be a full back test of the decade-long bull market support line. On the weekly chart, this red line, this is your decade-long bull market, and that red line would be a full back test. So could easily do that. I just don't think we're going to get there. I'm betting that we roll over here. Moving on, SPY. I don't want to cover the SPY in this video. Qs is kind of where the action's at for me right now. Let's look at the gold and and then also here's the corporate bonds. These things look like they're topping out right here. This looks like your rally that we had, and I think we roll over here. I think we fail here. Now remember, the Fed is in here buying, and that's what this is the Fed. But I think that people might use this as an opportunity to lighten up those positions. A lot of the time, the Fed's not going to be able to stop the market, but they might give big old funds an opportunity to lighten up, because they don't care necessarily if retail people lose all their money. That doesn't collapse big institutions or the financial institution. But big institutions have the power to do some real damage to the economy. So, ultimately, if they give by doing this and buying, being the buyer, that gives those institutions an opportunity to sell to the Fed and creating that rally. They get out, they get to lighten up their position, and then it can make the next leg down, but it won't do as much structural damage to the financial markets if these institutions don't take the losses. So just something to pay attention to. I think, I marked this out on the hourly. We tagged it right there. You can see starting to get weak. I think we roll over, but something to watch. Here's the bond market, treasury bonds. And the last one is investment grade corporate bonds. The Fed's just in here buying like crazy. So the markets have been rallying, but so is the bond market. And that's because the Fed's in here just buying. They're an indiscriminate buyer. They're just propping up the treasury market. It's probably the most important market from an economic standpoint that they need to keep it propped up. And so that's what they're doing. They're in here just dumping. They have unlimited amounts of money, and they have pretty much no restraint right now. So they're just buying whatever they want. And but that doesn't come without a price. And let's look at what that price is. Okay, and here's the price of all the Fed money printing. They're damaging the dollar. They're taking purchasing power away from the dollar. And I think the selling in the dollar has just gotten started. This has the potential to be a pretty big move to the downside. And so maybe I'll add to this a little bit. That might be prudent. You can see that we rejected. There's a lot going on in this chart, but it's very technical and it's playing out perfectly. So let me just try to break it down, because this is bigger picture stuff. The dollar selling off is because the Fed is just indiscriminately printing money. And by printing all those dollars, they are devaluing the dollar. Each dollar has less worth or purchasing power because there's a lot more of them in circulation, which means that prices are going to rise. As dollars fall, prices rise. So expect to see consumer prices rising, and that's the price of this stimulus bailout that the House and Congress is passing. They do it, they pass that kind of stuff because they want, politically it looks good. And a lot of people don't understand what the implications of that is. So all they see is checks in the mail and they're happy, and they expect the government to save them. So politically it's popular, but what it does is damage the dollar and ultimately can lead to, higher inflation. So down the road, when we have higher inflation and people are upset about that, they won't realize where it came from, but this is where it came from. And it came from, all this money printing. And so here's the dollar. It was in an uptrend right here. broke that trend. I called it out in a video a couple days ago and said, okay, I'm going to get short. I did get short. You know, I got 8,000 bucks on it. Nothing crazy, but got short, and it's just continuing to sell off. So I think I'm up a couple percentage points on that trade as of right now. From the breakdown and the back test, it's 3 3.3%. So up a little bit on that trade. You know, I did grab it right up in there, and still working out. Another thing is we're breaking bigger picture trend lines. So this trend line right here I've had in place. This is a daily chart. I've had this trend line in place for a while, and this was the trend line support for a long time, really going back to the 2018, and we just chopped within this upward channel here. And then it started to break. It got a little sloppy, started to break down, broke back above. But here's the move I think that you got to pay attention to. Oftentimes, the first move on a stock move, especially an impulsive move, is not the real move. That's usually the fake out move. So we saw a big impulsive move in the dollar when everybody was panic selling and rushing to the dollar. But then the Fed doing all the money printing is very bearish for the dollar and weak. And so now you'll probably see calmer heads prevail, where over a bigger time frame, the dollar continues to get weaker. The impulsive move, the reaction move, was to buy the dollar or rush to the dollar out of stocks. But now everybody's probably realizing, okay, the dollar's going to get weaker because they're just printing money out of like crazy, really. I mean, they've just pretty much gone nuclear on money printing. So I expect the dollar to continue to fall and continue to go south. And I expect gold and gold miners, gold especially, should continue to rise. Here's gold bullion, just basing out. You know, it hasn't broken any trend lines. It's just kind of basing out. So we've got, right now we're finding some resistance around 1630, and we're finding some support around 1600. Pretty tight range. This won't last most likely. This is a flag pattern, a bull flag pattern. So I expect this to break to the upside. And it will most likely break and make a price of, let's look here on the daily chart, see if we can mark it out. It's right up there. Yeah, it's going to be up around 1750. So I think that's the next breakout. I think we're heading up towards 1750. If we get to 1750, we're probably going to 1780. So I think that's your next target for gold bullion. Should be bullish for the miners. Miners continue to look constructive. I took a trade here on AEM this morning. Not working out as of now. Well, I sold the shares, but it was a day trade. But if you look at the 1 minute, we had the support right here. And I suspect this will still ramp up and close above support. But here's your trend line right here on AEM and Agnico Eagle Mining. And we held that, it's right here. And so if you can look at the 1 minute, you'll see that we fell right to it, undercut it just slightly. Let me roll out and see right here. So we undercut it, and as we undercut it, I grabbed, I grabbed 100 shares. I already got a relatively good position on this, but I grabbed a little bit and, was expecting this undercut to just be, exactly what it was, just an undercut of support. Grabbed it, it ramped up, sold those 100 shares into that ramp. I still have a core position on it. So, just little kind of pop shot trades, just adding to profit. That helps with when you hold a core position. If you can catch little pop shot trades on the position, then it helps, it helps. So now we've broken down a little bit more, but I suspect that they're going to ramp this thing up and close it back around or near this support line. Just given the nature of gold, and I think this should hold support. And look at the selling; it's not that impulsive. I mean, we're breaking support. We broke support here. See this big impulsive, or see this impulsive red candle followed by a ramp higher, selling, ramping higher, and so it's not impulsive selling. It's just like, this is what you call stop. They're rating stops essentially. People have stops set. They're rating those stops out, and then they'll ramp it higher. That's what I think is happening. So. That's it for the video, guys. I'll just leave it at that. I think we're, heading lower pretty soon, but we'll have to wait and see. And, I've pointed out the levels. So, I can't put out videos all the time when the levels are actually hitting. Like yesterday in triple Qs, I mean, we hit this resistance line in the very last like 5 or 6 minutes. So there was no opportunity to put out a video telling everyone that, oh, this is a great level, this is where I'm getting short. That's why I try to point out these levels in advance so that you just have them marked out. You can see it run up into there. That's a high probability area to take a short trade. And that's what I did. And sure enough, it's worked out. So yeah. All right, guys, catch you on the next video. Thanks. Bye.